Good morning, investors. You are now on KleverStock with me, Ainun Jaria, serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. The FPM KLCI slipped on Wednesday today, tracking the sharp overnight sell-off on Wall Street as renewed concerns over inflated equity valuations dampened investor sentiment. At the opening bell, the benchmark index fell 1.26 points to 1,622.24, mirroring the cautious tone across regional markets following remarks from top Wall Street executives warning of a potential correction. In the U.S., the S&P 500 and Nasdaq tumbled 1.17% and 2.04% respectively in Tuesday's trading session after Morgan Stanley CEO James Gorman and Goldman Sachs CEO David Solomon cautioned that stock valuations appeared stretched and that a significant market correction could occur within the next 2 years. Back home, sentiment remained muted amid the absence of strong domestic catalyst. Analysts said that with no major macroeconomic or corporate news to drive direction, the local market was likely to stay range-bound. TA Securities in a note said range-bound trade with a downside bias is expected amid broader market consolidation and a dearth of domestic positive catalysts to spark bargain hunting interest. However, Malacca Securities Senior Brahai noted that the impact of Wall Street's decline could be partially offset by better than expected U.S. tech earnings, which may support sentiment in local technology counters. It said, "We anticipate buying interest to cushion the downside risk on the domestic technology sector with a key focus on stocks such as Kellington, Vitrox, and Ford Franken." The brokerage added that traders might also turn their attention to consumer-oriented stocks such as EcoShop Marketing, 99 Speedmart, and Spritzer, given the anticipated a rise in tourist arrivals ahead of Visit Malaysia year 2026. In early trading, however, semiconductor-related counters saw sharp declines following the Nasdaq's heavy retreat overnight. Malaysian Pacific Industries MPI fell 50 cents to 30 ringgit and 6 cents. KESM Industries dropped 12 cents to 3 ringgit and 40 cents, and Pentamaster Corporation lost 10 cents to 4 ringgit. Meanwhile, PJ Bumi extended its sharp decline, plunging 53 cents to 1 ringgit and 24 cents after a 30% rout the previous day. The company responded to Bursa Malaysia Securities' unusual market activity UMA query by stating that it was unaware of any corporate development that could explain the sudden sell-off. Among the most active counters, NextG Bina rose half a cent to 5 cents, MMAG Holdings slipped 2.5 cents to 11.5 cents, and Borneo Oil was unchanged at half a cent. Moving on to local currency updates. The ringgit opened almost flat against US dollar this morning as investors took a cautious stance ahead of key lending rate decision by both Bank Negara Malaysia (BNM) and the US Federal Reserve. Market participants are closely monitoring policy developments, with BNM's Monetary Policy Committee (MPC) set to announce its overnight policy rate OPR decision tomorrow, while the Fed's Federal Funds Rate (FFR) review is scheduled for next month. At 8 a.m., the ringgit stood at 4.1945 or 4.2050 against the US dollar, compared with Tuesday's close of 4.1950 or 4.1985, showing little movement as investors awaited policy clarity. According to Bank Muhammad and Malaysia Berhad Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid, the market widely expects BNM to maintain the current OPR, while the Fed continues with its rate-cutting cycle, a dynamic that could further narrow the gap between the two benchmark rates. He said that a smaller rate differential would likely support foreign demand for Malaysian assets, given the country's improving fiscal positions and consistent reform measures. He told that, coupled with ongoing fiscal reforms in Malaysia, is credit positive for the country. more foreign funds would likely be attracted to Malaysian government securities and government investment issues. Abdul Nizam highlighted that the bid to cover ratio for government bonds, a key measure of investor demand, had remained strong at 2.6 times for the first 10 months of this year, compared with an average of 2.2 times from 2022 to 2024. This indicates steady foreign appetite for Malaysian debt instruments. And meanwhile, in the United States, the US dollar index DXY continued its upward trend, approaching the 10-point mark as the Washington government shutdown dragged into its 35th day, fueling investors' uncertainty. Abdul Nizam said that despite expectations for more rate cuts, mixed signals from Fed policymakers had prevented the greenback from weakening. He said it appears that the Fed should continue cutting interest rates, but mixed views among its members have challenged that outlook. This has lent support to the US dollar in the immediate term, adding that the USD-MYR pair is likely to trade in a narrow range today, between 4 ringgit 90 cents and 4 ringgit 20 cents today. At the opening, the ringgit traded mostly higher against major currency, reflecting selective buying interest. It strengthened against the British pound to 5.4612 or 5.4749 and rose versus the euro to 4.8174 or 4.8294. However, it slipped slightly against the Japanese yen to 2.7322 or 2.7392. Among regional currencies, the ringgit advanced against the Singapore dollar to 3.2075 or 3.2158 and firmed vis-a-vis the Thai baht to 12.8701 or 12.9118. It remained largely unchanged against the Indonesian rupiah at 251.0 or 251.8 and was steady against the Philippine peso at 7.16 or 7.19. Overall, analysts believe that the ringgit's direction in the near term will depend on the tone of PNM's policy statement tomorrow and the Fed's upcoming guidance, as well as global risk sentiment amid ongoing fiscal and political uncertainty in the US. Continuing with economic updates, Malaysia has emerged as the biggest winner in securing tariff exemptions from the United States, outpacing other ASEAN nations in what economists describe as a strategically negotiated trade breakthrough. The deal, which followed weeks of tense discussions, saw the US drop its threat of a 25% tariff on Malaysian exports after both sides reached an agreement that the Investment, Trade and Industry Ministry insists does not compromise Malaysia's sovereignty. In a statement issued late today, the ministry reassured stakeholders that national policy remained intact, saying the agreement does not cross our red lines. It confirmed that the US tariff on Malaysian had been reduced from 25% to 19%, achieved without compromising the nation's sovereign right to implement domestic laws. According to CGS international research economist Nazmi Idrus, more than 60% of Malaysia's exports to the US now enjoy zero tariff status, the highest in the region, ahead of Thailand and Vietnam, which just secured exemptions on just over 40% of their exports. He added that Vietnam remains significantly exposed, with tariffs covering 16.1% of its GDP, while Malaysia's and Thailand's exposure have dropped to single digits. Economist Dr. Jeffrey Williams said Malaysia's relatively strong outcome reflected a combination of strategic trade concessions and investment pledges. He said the key factors appear to be first, Malaysia zero-rated more than 1,000 US products in return for 1,700 zero ratings on the exports to the US. Second, Malaysia is committed to reducing non-tariff barriers, and third, it agreed to at least 70 billion US dollars worth of investments in the US, creating jobs and supporting large-scale procurement from US firms. However, Williams cautioned that Malaysia still faces reciprocal tariffs on nearly 90% of exports by value, meaning the benefits are substantial but not comprehensive. Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzaniza Abdul Rashid noted that Malaysia's long-standing trade ties with the US, especially in semiconductors, have helped shield it from harsher measures. He said imposing tariffs would mean hurting their own businesses, adding that Malaysia's rare earth element deposits give it a strategic leverage. But he also warned that the situation could shift with the US politics. Judging from how the Trump administration prescribed its policies, it was seen as to be quite ad hoc, with extensive use of executive orders. These can be revoked by the next president, he said, describing the outlook as fluid and uncertain. Mila University's senior lecturer Muhammad Khair Afham said Malaysia's success was tied to its efforts to trade with the US easier and more predictable. He concluded that while the outcome was not a sign of superiority over other ASEAN nations, it showed that Malaysia's ability to align with US trade priorities. The outcome is useful but not guaranteed, he said. Malaysia will need to maintain cooperation, stay relevant in US supply chains, and preserve their disadvantage. Moving on to corporate news update. Faytax Holdings Berhad subsidiary Faytax Berhad has entered into a Memorandum of Understanding MOU with South Korea's Das Corp to a technical partnership supporting Hyundai's Staria project in Malaysia, marking a significant step in deepening local participation in global automotive supply chains. The MOU, which was signed on October 29, establishes a comprehensive framework for engineering collaboration, product development, testing, technology transfer, and supply chain management between the two companies. The initiative is expected to bolster Faytax engineering capabilities while positioning Malaysia as a stronger player in the regional automotive manufacturing landscape. According to Faytax filing in Bursa Malaysia, the collaboration will see both companies working closely on the engineering design, validation, and testing of automotive components of the Hyundai Staria, Hyundai's premium multi-purpose vehicle MPV model. The partnership also covers the exchange of technical drawings, design specifications, and data, ensuring that production global aligns with Hyundai's global quality benchmarks. Additionally, Faytax and Das Corp will coordinate the procurement of a supply of tire parts, improving efficiency in local supply chain and reducing reliance on import competence. The financial and operational details of the collaboration will be finalized later through definitive agreements. Das Corp, headquarters in Gyeongju, South Korea, is recognized for its advanced automation technology and specialization in seating structures, components, and most efficient production system. The company has long-standing relationship with Hyundai Motor Group, contributing to several of its global vehicle programs. Meanwhile, Faytax Berhad, based in Kuala Kedah, has built a strong presence in Malaysia automotive sector, providing engineering and technical support services to major automotive and Tier 1 suppliers. This collaboration with Das Corp is expected to enhance Faytax's technical depth, allowing it to handle more than complex engineering tasks and become a key player in Malaysia's automotive value chain. In a statement, Faytax said the partnerships combines Das Corp's technological expertise with Faytax's loyal engineering and manufacturing strength, fostering innovation and technical self-reliance. And finally, wrapping up, we have major corporate developments and deals across Malaysia. AGX Group Berhad's unit AGX Logistics Vietnam has signed a 2-year agreement with Vietjet to provide freight forwarding and customs brokerage services from November 1st, 2025 to October 31st, 2027. And next, Binasra Corp Berhad secured a 188.5 million ringgit contract for mechanical and electrical fit-out works at a data center in Cyberjaya, including a guardhouse and refuse room, with completion expected within 4 months from site possession. Sasbadi Holdings Berhad has secured an 18-month of 0.43 million ringgit contract from the Ministry of Education to supply and deliver interactive digital storybooks for preschool use from November 3rd, 2025 to May 2nd, 2027. Techbond Group Berhad is acquiring 3 industrial plots in Eco Business Park 7, Negeri Sembilan for 27.8 million ringgit. The parcels may initially serve as an investment but offer optionality for future operations. And last but not least, PJ Bumi Berhad said it is not aware of any undisclosed developments that could have triggered the recent UMA in its shares after the stock slumped 29.8% to 1 ringgit and 77 cents on heavy volume. Now that's the wrap for Morning Bell Updates with me, Ainujaria, on KleverStock. Thank you for choosing us, investors. Stay tuned for the next live coming soon.